Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Hey everyone, welcome back. Today we're going to be taking a deep dive into the world of M&A, specifically the lower middle market in 2025.
All right.
And we're really lucky because we have this amazing report to guide us. It's called Market Moments That Matter. It's put out by the folks over at Intrepid Investment Bankers.
Yeah, they always have great insights.
And one of the things that really jumped out at me is that M&A for larger companies, they've kind of bounced back.
Oh, yeah.
Since, things have kind of settled down.
Right.
But the lower middle market, not so much. It's still lagging behind. But I don't know, maybe that's not a bad thing. What do you think?
Well, actually, that's one of the most interesting takeaways from Intrepid's report. They suggest this lag could actually mean we're about to see a surge in the lower middle market. Like, there's this pent-up demand ready to be unleashed.
Ooh, okay. So almost like a coiled spring.
Exactly.
Okay, so let's break this down a little bit.
Sure.
Intrepid has this chart in their report showing M&A volume, right? And they show it as a percentage of 2021 levels.
Right.
And for companies valued under $250 million, it's pretty clear things are still kind of quiet.
Yeah, they are.
So what's behind this lag? I mean, why is the lower middle market so slow to catch up?
Well, the lower middle market, it often marches to the beat of its own drum.
Yeah.
It doesn't always react immediately to like those larger economic shifts.
Right.
But what's interesting here is that this lag, combined with like the increasing demand we're seeing, plus, borrowing conditions are becoming more favorable. Well, it could actually create a really busy year for anyone operating in this space.
So it's like a hidden opportunity almost.
Yeah, I think that's a great way to put it. There's a lot of potential energy building up.
Interesting. Okay, so let's talk about the whole financing side of things.
Okay.
Because, how deals get financed, it's changing, right? Intrepid's report, they point out this pretty significant shift in 2024, like non-M&A financing. It actually dominated the market.
It did.
Making up like 50% compared to leveraged buyouts.
Yep.
50%. I mean, that's a huge change. So what's driving this shift?
Well, I think it really comes down to lenders having to get creative.
Okay.
With fewer LBO opportunities out there, they're turning to things like PIK interest.
PIK interest. Remind me what that is again.
Sure. So with PIK interest, borrowers can actually defer their interest payments.
Oh, okay.
And then there are things like equity kickers, which actually give lenders a share of future profits.
Interesting.
So, these are just a couple of examples, but they really show how financing is adapting to this new environment.
Okay, so if I'm a business owner in this market, right,
Sure.
and I'm thinking about, raising capital, it sounds like I should be looking beyond those traditional loans.
Yeah, I would say that's a really smart move. Exploring those alternative financing avenues, it could open up a lot of new possibilities and potentially better terms, too.
It's not your father's LBO market anymore, is it?
Not all.
That's a great point. So speaking of lenders, there's this chart in Intrepid's report that I wanted to ask you about.
Okay.
It's on credit spread compression.
Right.
Can you just break that down for our listeners a bit?
Yeah.
Like, what does that actually mean and how does it impact them?
Sure. So spread compression, it essentially tells you how competitive the lending landscape is. So, a compressed spread basically means that lenders they're competing fiercely for deals.
Okay.
Which is good news for borrowers, right?
Yeah.
Because it can mean lower interest rates and better terms.
So more competition means better deals.
Generally speaking, yes. But, and this is important, Intrepid also points out that lenders are becoming a lot more selective.
Okay.
Especially when it comes to complex deals. So having a strong business case, with solid financials, that's absolutely crucial.
Okay, so lenders are being cautious, even though there's all this competition. So what should borrowers be focusing on make themselves look attractive?
Well, lenders, they're really laser focused on stable cash flow and, ample liquidity. So demonstrating consistent financial performance, I mean, that's key to securing those favorable terms.
So you got to have your financial ducks in a row, right?
Exactly.
Okay. Now, let's talk about the Fed.
Yeah.
It's the elephant in the room, right?
Yeah.
Intrepid's report, it mentions a shift in market expectations regarding the Fed's easing policy in Q4 2024. And it seems like they're taking a more gradual approach than a lot of people initially anticipated.
Yeah, they are.
So what does this mean for our listeners?
Well, essentially, the Fed they're tapping the brakes a bit.
Yeah.
Their December forecast projected only 2 rate cuts in the next year. So while easing is definitely still on the table, it's happening a lot slower than some had hoped.
So how does that slower pace of easing impact borrowing costs, especially in the lower middle market? Could it affect, those attractive terms we were just talking about?
Yeah, it's definitely something to keep an eye on. While borrowing costs they're likely to decrease, it could be a slower decline than some borrowers were hoping for.
Right.
So, it's important to factor that in when you're planning your financing strategy.
Okay, so managing expectations is key.
Absolutely.
Now let's move on to leverage.
All right.
Intrepid has this chart in their report. It's on total leverage specifically for non-unitranche deals in the lower middle market. And there's a clear trend there.
There is.
So what's the story?
Well, the chart shows that leverage it's ticking upwards from its post-pandemic lows.
Okay.
And that's a positive sign, right?
Yeah.
It suggests that lenders they're becoming more comfortable with higher leverage levels. However, it's important to note that it's still below its pre-pandemic peak.
Okay, so leverage is back, but with a bit of a touch of caution.
Yeah, I think that's a good way to put it.
Okay.
It suggests that credit conditions are easing, but, lenders they're still proceeding cautiously, they're
Right.
carefully assessing risk, and they're really focused on those, strong fundamentals we talked about earlier.
So lenders are being strategic. They're not just jumping back in.
Exactly.
Okay. So far we've uncovered some pretty intriguing trends. We've got this potential M&A surge in the lower middle market.
Right.
We've got the rise of these alternative financing options. We've got lenders who are competitive but also discerning. And we've got a Fed that's easing but doing it gradually.
Yep.
But before we move on, I want to just highlight a key takeaway for our listeners.
Okay, sounds good.
Given all these factors we've been talking about, 2025, it really has the potential to be a year of opportunity in the lower middle market.
It does.
But success is likely going to favor those who are prepared.
Yeah.
So if you're considering an acquisition, if you're thinking about raising capital, now is the time to really refine your strategy. Make sure your financials are in tip-top shape and craft a really compelling narrative for those potential lenders and investors.
I couldn't agree more. Being proactive and informed, those are the keys.
Well said. We'll be back in a moment to explore more insights from Intrepid's report and really unpack what it all means for you.
Sounds good. Welcome back. So we were just talking about leverage and, how it's making a comeback, but cautiously.
Right. But I'm curious how the current leverage environment, how does it actually compare to, what we saw before the pandemic?
Well, that's where Intrepid's report gets really interesting. They have this chart showing total leverage specifically for those non-unitranche deals in the lower middle market. And it shows that while leverage is rising, it's still not quite back to those pre-pandemic peaks.
So there's room to grow, but lenders are still testing the waters.
Yeah, I think that's a great way to put it. It's like they're dipping their toes back in, but they're not diving in head first.
Makes sense. They're being cautious.
Absolutely. They're really mindful of all the potential economic uncertainties out there.
Right.
And so they're looking for businesses that have, really solid foundations, stable cash flow, strong liquidity. Those are the things that are going to make them feel more comfortable.
Okay. So for our listeners who are, maybe thinking about making an acquisition or raising capital, what's the key takeaway here?
Well, I would say that, 2025, it really presents this unique window of opportunity in the lower middle market. You've got this convergence of factors, right? It's creating a really dynamic environment.
It's like all the pieces are aligning, but there's still that element of caution.
Exactly.
So being prepared, that's key. What steps can our listeners take to really position themselves for success in this kind of market?
Well, first and foremost, you gotta sharpen your strategy. Make sure your financials are in order.
Right.
And then, build a really strong narrative.
Oh, okay.
One that's going to resonate with potential lenders and investors.
So it's not just about the numbers, it's about the story you tell.
Yeah, exactly. And don't forget about those alternative financing options we discussed.
Right.
Explore those avenues. They might open up some new possibilities.
So adaptability, preparation, those are essential.
Couldn't agree more.
Okay. So we've been talking a lot about Intrepid's insights.
Yeah.
But I want to take a moment to talk about Intrepid itself.
Sure.
I mean, who are they? And why should our listeners, why should they care about their analysis?
Well, Intrepid Investment Bankers, they're a leading middle market investment bank, and they have a really deep understanding of the M&A landscape, especially in the lower middle market.
Okay.
And their Market Moments That Matter report, I mean, it's highly respected in the industry.
No, they're not just some fly-by-night firm.
Okay.
Putting out a report.
No, not at all. They've got a proven track record of advising companies on M&A transactions and capital raises.
Right.
And their insights they're valuable because they're based on real world experience and data. They really understand the nuances of the lower middle market.
Okay, so for our listeners out there, if you're looking for guidance, on how to navigate the complexities of M&A in this market, it sounds like Intrepid is a firm worth considering.
I would definitely agree with that. Their expertise can be a real asset to any business owner or investor who's operating in this space.
Okay. So we've covered a lot of ground today.
I have.
From this potential M&A surge to the rise of alternative financing, the evolving role of lenders. We've talked about the Fed, and their gradual easing stance and this cautious return of leverage.
Yeah.
But before we wrap up, I want to leave our listeners with one final thought.
Okay, I'm all ears.
We've discussed the macro trends, but I'm thinking about our listeners, like the individual business owners, the investors. How can they take these insights and turn them into actionable steps, for their businesses?
Yeah, that's the crucial question, right? It's all about connecting those dots between the broader market dynamics and your specific situations. So,
right.
So ask yourself, how can I leverage these trends to my advantage?
Exactly. Are you positioned to capitalize on this potential M&A surge? Could exploring those alternative financing options, could that unlock new growth opportunities for your business?
Those are the kinds of questions that can really help you turn those insights into action. And remember, you don't have to go it alone. There are resources out there like Intrepid that can provide expert guidance and support. So don't hesitate to reach out and seek help if you need it.
Yeah, sometimes having that experienced partner can make all the difference.
Absolutely.
Well, this has been a very insightful deep dive.
It has.
I feel like I've learned a lot, and I hope our listeners have too.
It's been a pleasure exploring these topics with you and our listeners.
Absolutely. And we'll be back in just a moment to answer some listener questions and share some additional resources.
Sounds good.
All right, and we're back for the final part of our deep dive into the lower middle market M&A outlook for 2025. Looking at all this stuff in Intrepid's report, it really highlights just how dynamic this market segment is becoming.
It really does.
Yeah.
Yeah, there's a real sense of opportunity out there.
Yeah, it feels like the perfect time to address some questions that our listeners might have, after absorbing all this information. So let's dive into the mailbag and see what people are asking.
Sounds good to me.
All right, so our first question comes from Sarah, a business owner in the manufacturing sector. And Sarah asks, with all this talk about alternative financing, what are some specific examples? And how do I know if they're right for me?
That's a great question, Sarah. As we mentioned earlier, it's not just about those traditional leveraged buyouts anymore. Lenders they're getting creative, right? With options like PIK interest, which allows you to defer those interest payments, or equity kickers, where the lender actually gets a share of your company's future profits. Those are just a couple of examples. And whether they're right for you, it really depends on your individual circumstances and your risk tolerance.
So it's about finding the right tool for the job.
Exactly. It's crucial to carefully evaluate the terms and conditions of any financing arrangement, right? Make sure it aligns with your long-term goals. A good financial advisor can help you navigate those options and determine, what the best fit is for your business.
Great advice. Our next question comes from John, an investor who's looking to enter the lower middle market. And John asks, given the competitive lending landscape, how can I make my investment opportunities stand out to lenders?
That's a key question, John. Remember, lenders they're seeking stability. They want predictability, and they want a strong management team.
Right.
So to make your opportunity shine, you really need to highlight those aspects. Focus on demonstrating consistent cash flow, a healthy balance sheet, and a clear and well-defined growth strategy.
And don't forget the power of a compelling narrative.
Oh, absolutely. Investors and lenders, they're drawn to stories they can believe in.
Yeah.
Clearly articulate your vision, showcase your team's expertise, and demonstrate why your opportunity is worth their investment.
All right, let's take one more question. This one comes from Maria, a CEO who's considering an acquisition. And Maria asks, with leverage returning, but cautiously, how much leverage is too much?
That's the million-dollar question, Maria. And unfortunately, there's no one-size-fits-all answer. The ideal leverage ratio, it really depends on a lot of factors. It depends on your industry, your company's financial health, and your risk tolerance.
So it's about finding that sweet spot.
Exactly. Too much leverage, it can expose your business to unnecessary risk, right? But too little, well, that might limit your growth potential.
Right.
The key is to strike a balance that allows you to pursue those acquisitions strategically without, jeopardizing your financial stability.
So thoughtful planning and careful consideration are essential.
Absolutely.
Well, those are some great questions, and I hope our answers have, provided some valuable insights for our listener.
Me too. It's been a pleasure exploring these topics today.
Absolutely. As we wrap up this deep dive into the 2025 lower middle market M&A outlook, I want to leave you with one final thought. The lower middle market, it's bringing with opportunity.
It is.
There are deals to be made. There's growth to be achieved.
Absolutely. But remember, knowledge is power. Stay informed, be adaptable, and don't hesitate to seek out expert guidance when you need it.
Well said. That's a wrap on our deep dive. Thanks for joining us, and we'll catch you on our next deep dive adventure.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.